Welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Wilson and Judd Carlson. They're co-founders of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
Oh, I'm doing well. Been a busy month or so here.
Oh, I know you've been extraordinarily busy. Judd, how are you today?
Doing great. Doing great.
Good.
Thank you.
So good to see you again.
Very nice to see you.
Thank you so much. Let's talk a little bit about how busy you both have been, because obviously this show has just catapulted your offices to a whole new level. I'm saying offices because there's more than one location. Mm-hmm. You've been so busy. What's life been like in the office, Stewart?
Well, you know what? I think I'm on 21 straight days of working. It's tough, but you know what we're seeing right now is the message we're delivering is really resonating with the audience, because you know there's a couple things that are really important to talk about. And taxes, for example, people kind of sense a change is coming, right?
Sure.
Not just politically, but you know financially as well. And so a lot of people are really concerned about you know how to prepare for the imminent changes in the tax environment that we're in.
Absolutely. Judd, are you getting a lot of questions about people with taxes coming in, just calling and saying, what is your opinion on this? Are they going up in the future? Things like that?
Yeah, absolutely. I mean, we're tending to see a lot of folks that are either calling in from the show or coming in following those for the appointments. And the questions that they're asking are, you know, well, what's going on with taxes? You know, what do I do with capital gains? And they want to look at a lot of the different planning. So we're trying to take the weekly calls that we get and help try and tailor our future episodes to answer those a little bit more.
Okay. Stewart, how important is it to have tax planning be part of a retirement plan, if you will?
Well, it really, to us, is one of the major parts of financial planning. You know, asset preservation, tax and retirement, tax is in our name of our business, and it's there for a reason. You know, we have a tax office built into our office in our Sun City Surprise office. We have a full, you know, tax preparation office, but the whole purpose of the tax preparation office isn't just tax preparation. It's about tax planning. You know, we have about 600-700 clients that come through every year just to prepare taxes. But the value it provides isn't just to prepare taxes, right? People sometimes can do that at home with TurboTax, right?
Sure.
Or one of the other, you know, great software programs. What it does do is it allows us to more easily plan for the future, you know, to be able to do that. And so going into the end of the year, we are always swamped. I mean, it is, you know, when you look at the imminent tax changes that are happening, all the planning tools that we have, November, December are just absolutely swamped for us. So it's really important because people realize, hey, you know, winter is coming. The mood is changing in terms of the tax environment, and it's really, really important to plan around that.
Absolutely. Judd, are you finding that as well, that basically people have a lot of year-end questions, if you will, as we're edging closer?
Yeah, I would definitely say from the show, we've been seeing more people with those kind of questions. I think, you know, typically that's where most tax operations, they're only focused on taxes. And unfortunately, they're looking at the taxes in the spring for everything that already happened for the previous year.
Okay.
So if you made mistakes, if you paid too much, if something happened, now you're already 2 or 3 months into the next year before you can try and catch up. So what we try and get people to do is be proactive on that side, make tax preparation a year-round plan that you're working on. And in the end, you're either going to be way more efficient or certainly pay less in taxes.
Okay. Stewart, is there a strategy that you recommend to help people actually save on their taxes, if you will? Is there a one-size-fits-all for that, or is everyone different?
Well, yeah, but like Judd was saying, you've got to plan. You've got to do it ahead. The problem with most people, when they go to their tax office, they're going in February, March, April, and those offices are slammed.
Sure.
They are just packed. These people are working 10, 15-hour days to get all of those tax returns done. They don't have time to plan. They're just trying to get you in and out, right? And if you do your own taxes on one of the, you know, TurboTax or, you know, Quicken, whatever, the reality is I like that to some extent because it makes you the CFO of your own personal situation. You're way more in touch with things. The problem is, how do you plan when you don't have the understanding of all of the tax laws? See, these programs make it easy to file, but from a planning perspective, it makes it really tough, right? Because you're relying only on your own expertise. And I can tell you, even as an advisor, I have mentors, I have advisors. There are people that I rely on to guide me, because sometimes you only know what you know.
True.
And it's good to rely on people that have an expertise that you don't.
Absolutely. It always helps to have someone to go to that you can ask those questions to.
For sure.
Absolutely. Is there a common mistake, Judd, that people make with their taxes?
Well, yeah. I mean, again, I think the biggest thing people do is they either don't pull everything out until December 31st, or they wait until all the tax documents show up. I also think lots of folks should get a second opinion on their taxes. And as Stewart mentioned, there's some great programs out there. The downside about those programs is as people are going through them and they're selecting yes and no, they're eliminating an entire series of other questions. And the best example I had is we have an engineer who has been a financial client of ours, but always did his own taxes. And I said, hey, give us a chance to take a look at those for you. Let's run them through our system. And he had a daughter, one child, daughter who's in college, and he elected to take a $1,000 tax credit.
Okay.
Well, when we reviewed his taxes, we found that if he only took $750 on that first credit, there was another $750 credit available to him. So he could have got $1,500 instead of the $1,000, which obviously more than pays for our services or the cost of the tax software. So again, it's just like anything else. It's really important to get that second opinion.
Absolutely. Stewart, let me ask you, when someone books the initial consultation with the office, what does that experience feel like and how long does it typically take?
Well, we like to spend an hour to an hour and a half getting to know each other. I like to learn about their situation, and it's really their time. It's not my time, right? So people can use it how they want. But what I do like to do is find out, every aspect that they're comfortable sharing. First of all, it's good for them to bring in statements for us to get an understanding of what their financial position is. But also, it's really helpful to bring in a tax return so we can look and we can have our analysts take a look at any holes in their income strategy.
Okay.
For example, a lot of people, we'll have clients that are in the 12 or 22% bracket now, but when they retire, they're going to be jumping tax brackets. And it's really important not just to look at how much tax you can save right now, which I think is the big mistake. It's about how to save taxes over your lifetime and how to create an efficient model. For example, if you're in a 401k and you realize that, hey, it's nice to save those taxes now, but what you're doing is you're deferring those taxes to a time when you're retired, and now you're on Social Security. Now, Social Security in all circumstances does not have to be taxable, but it is once you cross certain income thresholds with provisional income. So what we try to do is create the most efficient model possible. And for our clients, honestly, the best time to come in to see us, if you're 57, 58, 59, and you're still working, that is the time to really come in and start making a plan. Because people realize we have a limited window left in this very, very, very efficient tax window that we're in right now. So I think it's really important to plan around what we know for certain. Now, we don't know what it's going to change to, right?
Right.
I know we'll talk about that a little bit later about the changes that we believe are coming, but it's really, really important to plan now.
Absolutely. Thank you, Stewart. Thank you, Judd. To the viewers at home, we're going to actually have a little bit of a video for you to watch about Stewart and Judd, just to learn why they are so passionate about what they do. They are helping folks every day plan properly for retirement, as well as helping them navigate through taxes as well. There's a number I want you to write down. It's 833-652-7829. You don't need to call it right now, but you're going to want to a little bit later on during the show, and I'll tell you why. But first, sit back, relax, and watch this incredible video presentation about Stewart and Judd and a day in life of their work. So we'll be right back momentarily.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, I love that video, just showcasing you in the office, what your day-to-day life is like. Because people in the viewing audience, they may be tuning in for the very first time. They might be watching for the very first time. So Stewart, where does your passion come from for helping others?
Well, I get a complete enjoyment out of watching us create substantial change. Most people are used to having advisors that pay attention to the money, right? But what we try to do is look at all aspects of their financial situation. And it's really neat being different, right? Mm-hmm. Now, it's somewhat disruptive to the environment, right? A lot of advisors like to really just focus on the money itself.
Sure.
But to us, you have to realize advisors get paid to look at your money. Mm. And in the past, it has always been okay just to focus on the money because, most people do the least amount of work necessary to get paid.
Sure.
But what we're trying to do is make it, create a bigger value for our clients so that they realize that, hey, by doing business with us, we can at least take a look at their tax situation. We can look at their estate planning situation, but it's the full picture.
Absolutely.
Yeah.
Absolutely. So it's a one-stop shop, if you will.
Well, yeah. And, our commitment to our clients is that, if, first of all, we find out if it's a good fit, right? And if it is a good fit, what we like to say is that, my commitment to my clients is that unless you get rid of me, I'm here till the end. And it's, me taking care of my clients, Judd taking care of his. We don't want super shallow relationships with our clients. We want to get to know each other, right? And my commitment is that if something ever happens to your spouse, or if something did happen to your spouse, I will be there. I will be the one specifically handling all that stuff to get everything in order and take care of things. And most people just pass that work off, and that's not what we do. We want people to feel comfortable knowing that we'll be there for them till the end.
Absolutely. And I'm going to ask you the same question, Judd. Where does your passion come from for helping others? Why do you get up in the morning, and why do you love what you do?
Well, it's one of those things where we have just built over the course of our business, obviously the multi-facets that we have. And I think the biggest part of my job that I enjoy, one would be like Stewart said, where when something happens to someone that we've worked with for a long time, that we're there for that surviving spouse or we're there for those kids. Yeah. I would say my favorite is probably someone comes in and says, well, I've got all this stuff and I don't know if I can retire and I hate my job, and we can sit down and walk through that and tell them, hey, you can go in and give your resignation tomorrow if you want. Yeah. And for some people, that really is, I can stick it out a couple more years now that they know that they can quit anytime. But so those would probably be the two things that definitely drive my passion for that.
Aw, thank you so much, both of you. I wanted to ask you a question. We talked a little bit, obviously, our first segment, all about tax planning. But Stewart, what are some of the tools that you can use to help tax planning as well? Well,
one of the very obvious tools is Roth planning, using Roths. Now, most people realize that Roths are good and Roths are better than non-Roths, but most people don't know how to implement it. Like, for example, if they have a 401k and they see that 401k Roth is available, they really don't know what to choose, right? Because, they don't understand it. Well, what we do is we show them with our cash flow modeling how it will affect them specifically. And once again, that brings back into our tax office and why we have a tax office. But, there's several reasons why advisors don't go down the road of Roth planning. Number one, they know in general that it works just like the clients, but they can't model it out. Most of the big box brokerages are prevented corporately from being able to give any sort of tax advice. Well, that's why we have tax people in our office to give that advice. It's not just us doing the analysis. It's our team of enrolled agents and CPAs that do the analysis for us, and we present it. It's really important to have that sort of plan. The other reason advisors don't push Roth is, just think about it. Think about the business aspect of it. Number one, if somebody has $100 million block of business that they manage of clients, and they tell everybody to convert their IRAs to Roth, well, generally they're going to pay their taxes out of those accounts. So all of a sudden that 100 million turns into 78 million or 75 million. They just gave themselves a 22 or 25% pay cut by giving that advice. And I think sometimes there's a lot of pressure on advisors to really grow their business. There's so much pressure to grow by their managers that they never do those sort of things. And so is it better? Absolutely. But the secret sauce of what we have is basically to know how much should I do and when should I do it. We're going through that right now, all of our tax planning, our end of year tax planning, where we're really finding out what the best way to do that is.
Absolutely.
Well, and if I can, jump on Stewart's coattails there with that, it does. It comes back to, like he's saying, so there's 3 reasons that most financial or other financial advisors don't recommend Roth. One, they don't know about it. 2, they don't care about it. Or 3, they're not allowed to talk about it.
Okay.
And so those are one of the things where, as Stewart mentioned, with our business, we cover those aspects. And then it also comes back to being a fiduciary. If you're working with an advisor who's not a fiduciary, then they don't have to put your best interest first. They're not allowed to harm you intentionally, but they're not having to put your best interest first. They're not disclosing their conflicts of interest. And so that's where, if it's in the best case of the client, as Stewart used in his example, if to convert that 100 million and turn it into 72 million is what's best for them, then obviously, that's what you do as a fiduciary.
Absolutely. Thank you so much. Stewart, should a person be concerned if they're not hearing from their advisor? What is your take on that?
Well, yeah, absolutely. And I think what a lot of brokers realize is that people don't make changes, right? People don't seek out help. They set it, they forget about it, and just kind of assume that it's going to do its thing. I had a client I saw the other day, this phenomenal couple that had these investments that literally hasn't made any money for, like 7 years. And we've gone through one of the greatest markets in market history. And if your money hasn't, doubled or tripled since 2009, you're substantially lagging, right? And it's really, really important,
Sure.
to take the affirmative action to call and find out, get a second opinion.
Yeah.
It's super important to get a second opinion. And all it takes is a call to us. We'd be more than happy to review your situation, to take a look at it, and really give you a fiduciary view of what's going on in the portfolio.
Absolutely. Well, Stewart, this is the perfect time for us to go ahead and open up the phone lines to the viewers. Would you like to tell them what they can expect to receive by calling in today?
Sure, absolutely. So if you call 833-652-7829, Judd or I would be glad to take a look at your portfolio, give you an in-depth look at what's going on there, what kind of taxes or tax issues we have, and that would be a complimentary review. No cost, no catch. We're just giving you a second opinion. Just call 833-652-7829. We would be glad to help.
Stewart, thank you so much. Judd, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. We know you have a lot of questions about how to plan for your perfect retirement. Stewart and Judd have the answers for you. Again, the number is 833-652-7829. We have to take a very short commercial break, but when we come back, I'm going to have more questions and answers about how you can plan your perfect retirement. Please stay tuned.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're co-founders of Asset Preservation Tax and Retirement Services. A wonderful show that we're having today, gentlemen, just talking so much about taxes, if you will. We're hearing a lot about changes, though, and I wanted to ask you, Stewart, what are some of the changes that we're seeing in regards to taxes, tax planning, what have you?
Well, right now it's kind of up in the air, right?
Okay.
So what we can do is take a look at what kind of commitments were made during campaigns and how that differs from what we currently have. Now, first and foremost, one of the things that that President Biden elect ran on was getting rid of capital gains.
Yes.
Now, let me just kind of explain that to the viewing audience. What capital gains is when you buy an asset, whether it's a stock, a house, whatever, it appreciates in value. Let's say you buy it for $100,000 and it grows to $200,000. When you sell that, you will be paying a capital gain. Well, what some of the changes that are being talked about are that they'll be moving it to ordinary income. So it'll go from a 15% to 20% tax to whatever your current ordinary income is. And the problem with that is that those taxes are substantially higher than capital gains, right? There's an argument for why it makes sense and why it doesn't. I'm not going to get into that. But what they're also talking about doing is getting rid of step up in basis. Now, what step up in basis is basically, let's just say you buy a stock. Your dad bought a stock for $100. It's now worth $500 years later, right?
Okay.
And when you died, or when he died, it passes to the heirs at the current market value. So all of that tax is wiped out, right? Now, people would say, well, shouldn't he pay, someone should pay tax on that. Well, let's think about the farm owner in Indiana that has this farm that, dad passed it to the kid, and that property's gone in value from $100,000 to $200,000. Sometimes what we're seeing is that those kids are having to sell the farm in a fire sale to pay the tax bill.
Oh my goodness.
And they don't have the tax bill, so they don't have the tax money for that. So it's really a different change. What's also really important is tax brackets, right? On the ordinary income side, we're seeing some substantial changes. Now, once again, who knows what's going to actually be implemented? But what it looks like is if the promises are kept, the Trump tax cuts will be, dissolved, gotten rid of. But on the other hand, you're hearing that it'll only affect people for $400,000 and above.
Right.
Now, two things, both of those things can't both be true, right?
Okay.
One of them is, one's true and one can't be, right?
Exactly.
Because if you get rid of the Trump tax cuts, that affects people all the way down to the 12% tax bracket.
Yeah.
So people realize we are in this very efficient window right now, and you need to take advantage of it. You need to be able to plan around that. And most people don't, because once again, when you go talk to your tax person during tax time, they're so busy and they're telling you, hey, you need to talk to your financial advisor about that. Then your financial advisor doesn't want to talk about taxes. So they say, talk to your tax person, and then the conversation never happens. So like Judd always says, the right hand doesn't know what the left hand's doing, and the plan never gets made. And, Judd does some really amazing cash flow work for our clients, which is really, really sophisticated cash flow analysis where we can plan out. We had a client with several $1 million that we made a recommendation to do a $2 million single year Roth conversion. He showed it to his CPA, and the guy thought we were morons. Well, then Judd presented his cash flow work, and he's like, wow, I had no idea. Because people are thinking about paying taxes now, not over the next 10 years or 20 years. And just remember, it's about Social Security too. As a couple, most couples are going to get $900,000 to $1.3 million in Social Security benefits. Do you want to pay taxes on that, or do you want it tax-free? Well, for some people, it's very possible to get them tax-free.
Very nice.
Yeah.
Very nice. People, I think, would love to have that be tax-free.
Right? I mean, it's, for some people, it's their biggest asset, so you want to plan around it. You know, for people at the lower tax brackets, obviously it's not quite as big of a deal, but for clients that, you know, have these great pensions, Social Security, you know, substantial 401ks, they really need to plan. And honestly, we are anticipating a tsunami of response over the next month, just because people are running for the doors. They want to be planning.
Yeah.
If people do not take advantage of their tax situation now, of this environment, you're missing the boat.
Absolutely. Judd, is it ever too late to start on a retirement plan, if you will? I mean, listening to all of this and putting a plan in place, but is it ever too late?
No, I mean, you know, you may have to make some adjustments to your plans depending on how late you start. I think the better question is, you know, is it ever too early? And the answer is no. You know, you always hear the story about someone who, you know, has a terrible illness or something, but they're glad they caught it early. And I've never heard someone say, oh, I went to the doctor and I'm perfectly healthy. That's the worst thing ever. And so I think that's where, when we talk about people coming in and getting that second opinion, you know, just getting a look at things, you know, it's really important to do that, because then you know that you're on track. Some people don't have a plan. They're just putting money away, hoping it's going to be enough. And what we want to be able to do is give them that opportunity to show them that they are on the right track. They don't need to go out and take all this extra risk. So, you know, again, a lot of that comes back and forth to where are you at, where do you want to be, and, you know, do you have the plan and the people to get there?
Absolutely. Absolutely. Thank you so much. Stewart, we are almost to the end of our show. I can't believe it. And Judd, this has been an amazing week talking about taxes. Any final words you'd like to share with the viewing audience today?
Well, in the words of one of my great mentors back east there, sometimes you got to just get off the couch and make a call to plan. You know, Mark Henry says that all the time. You know, get off the couch, make a call, make a plan.
Absolutely. Absolutely. Well, gentlemen, thank you both for such an amazing show. And I know the viewing audience has enjoyed it so much because it's so informative and it's so timely. To the viewers at home, thank you so much for spending time with us this week. We know that you have a lot of questions about how to plan for your perfect retirement. Stewart and Judd have the answers for you. All you have to do is pick up the phone and call. The offer today is complimentary. The number is 833-652-7829. You deserve to have a great partner in retirement. All you have to do is pick up the phone and call. Thank you again for watching. Be safe, be happy, be blessed, and we'll see you here next week.